Liberty Mutual is struggling a little bit in the market today, and let's talk about the actual growth of this company because it's changed drastically in the last 12 to 15 months. We can look at the numbers and go over what exactly happened, but they're losing a ton of business. And one of the reasons is the rate changes. Their rate increase recently across the US has gone pretty drastic as far as companies go. Although Liberty Mutual is a great company, and I've got friends that work there, I've got family members that work there, and I've always found them competitive for the most part, but overall a good company to be with. The downfall is price plays a factor sometimes, and one of the things that they've recently changed is you've seen them go from about a 1 to 3% increase from year over to year to, in some areas, almost a 10+% increase in premium. If you look at their growth rate in 2021, their policies in force grew about 7.9%. Every single quarter since then, it has gone down. So they went from 7.9% down to 6.2%. Doesn't seem like a lot. It only drops almost 1 point whatever percent that is, but that's a major difference in income for a company like this. Imagine, let's just use $1 billion, for example. You take a percentage away from that, and that's what, 10 million or a million or whatever. It's a large number, right? So they're losing just from quarter 1, 2021 to quarter 2, 2021. They lost a lot. Let's fast forward a little bit. Quarter 3 dropped to 5.9%. Quarter 4, not as big, 5.7%, but it's still, so we're seeing the trend dip and then slow down almost like it's going to curve back up, but it doesn't. Quarter 1 of 2022, it dropped down a whole percentage. It dropped down to 4.7% of policies in force. So they're losing customers as these rate increases hit. Now, let's think of it strategically. It's not necessarily a bad thing because maybe the customers that they're losing are the clients that weren't a fit for them in the first place. We see it all the time. I see agents write policies they never should even be thinking of. That's not a fit. It's not benefiting anyone. Now they've got to trim off the bottom edges. So losing 1% or 0.5% here or there isn't bad. But from the 7.9 to down to 4.7 and even lower, we're starting to lose some traction. If we've raised the rate, let's say 6, 7, 8% to this point, then we're getting more income coming in. Even though we're losing customers, we're profiting more money. It keeps going. So the 4.7 turned into 3.9 policies in force, so they're losing pretty heavily, but they're still growing, right? That 3.9 in quarter 3 of 2022 has dropped down to 1.3%. Today, quarter 4 of 2022, going into we're in the current new quarter or ending the quarter of 2023, they're down negative 1.5%. Overall increase that they've had from 2021 to the end of 2022, they've had about a 12 point some odd percent increase in premium. That's big enough to lose a lot of clients. Now, let's back off a little bit because Liberty Mutual isn't blowing things out of the water. If you look at companies like Allstate and State Farm, you're seeing some of those rate increases more than that. Allstate went up 20, 30, even 40% in one state. Yes, there is a lot of rate changes and rate increases, but you got to look at the companies that are stealing the business. There's a lot of companies that haven't had those big of a rate increase that are starting to capture some of that. Now, I'm just looking at the personal line section. They still have commercial. They did buy a company called State Auto, and State Auto caused a lot of claims. They were naturally just already coming in. So that's a piece that you've got to factor in. And they also own a sub company called Safeco. That company is seeing similar scenarios to where their home prices are starting to increase a little bit, and they're not as competitive in the market. Still great companies, it's just the financial, they're not a fit for everyone anymore. That's a little bit of a good thing because now you can have more of a niche type clientele to where you have the people that you want in your companies. For me, it actually is a big benefit because I work in an independent agency and we shop multiple companies. So when Allstate or State Farm or Geico or whoever goes crazy in my area, then I capitalize on the people looking for a better fit. Because I work with different companies and not everybody raised the rates, some didn't, I've got a fit. And when I put them with company B and they're a better fit for a customer, even if they start following trend, now I can go back to company A or company C and pivot to where it needs to be the better fit for the client. Keep in mind, price isn't always the factor. I personally am staying with the company that I am with, even though I had about a 10% increase in premium. Part of it was due to the increase and part of it was due to the value of my home, Yes, would I like to prefer not to go up and save it? Absolutely. And the alternative is I could find a cheaper option, but you got to remember, insurance is still a get what you pay for scenario. For those of you that are looking for insurance, I'll put a link in the description below because I have seen a lot of these increases with the different companies. If you're one of the companies that has seen a 20-30% increase, then it makes sense. You're probably not going to be a fit for that company anymore. Makes sense to shop with different companies, and if you know the right agent, go to them. If you're still looking and you haven't found the agent, I'll try to link you up with somebody that is in your local area, whether it's my company or a company that I work with. That'll all be in the description below if you're interested. So where's Liberty Mutual going to go from here? It's a little unclear because, like we just said, they have a lot of up in the air pieces. They're trying to figure out what to do with their state auto book. They're non-renewing a lot of that going forward, but it hasn't happened yet. This is the year in 2023 where it starts. So some people will still stay with that state auto brand until 2024, and they're going to be happy until they have to move. Other scenarios is they're having a lot of claims, so if they can try to slow that down, not that there's much they can do about it, but if that luck plays that factor, because the black swan events were hurricanes and more hurricanes than normal in Florida, or less rainstorms and snowstorms in Texas and things like that, those haven't been as impactful in this year than it has been the year before. So those are benefits to them to where they might see a little bit more profit, but also the downfall to you as a customer is when other companies start to come up to that level of raising their rates, you're going to notice that what you thought wasn't competitive might actually be competitive. Don't get me wrong, I hate inflation just as much as you do. I just am showing you the trends that I see happening as far as they go. For me, if it was my choice, I would probably, as a customer, stay with them unless I saw a drastic change in my policy, which indicated that I'm no longer a fit for them at the time, and maybe it's time to look. As far as a company standpoint, they're strong. They're one of the A-rated companies, I believe, on the AM Best, so I don't see them necessarily going anywhere. They actually reinsure other companies, so they're powerful beyond what we see on the front end. I don't know. Let me know what your thoughts are. Is there a piece that you know that I'm missing? Put it in the description below. Otherwise, if you're a customer just looking for better deals, I'll put my discount video here that might go over a little bit more detail how you can actually save on your policy that you have now. That way, if you're not looking to switch, you might be able to save some extra money on the current policy. I'm Mark with Think Insurance. I'll see you in the next one.